The name Celsius Network has been on everyone's lips for the past 3 weeks, but not for good reason, as the platform is at the epicenter of the current crypto crisis and market downturn. Celsius Network paused all withdrawals, swaps, and transfers between accounts just a few weeks ago, as many had predicted. Users' funds are effectively frozen, despite the company's promise that acting in the best interest of our community is our top priority. In any case, Celsius Network is a major player in the cryptocurrency space, and one of the largest cryptocurrency lenders. It's also clearly in distress, a situation that, if it worsens, could have serious ramifications for the entire space. Welcome to Capital Alpha, bringing you your weekly dose of crypto news and education. Last week we did a $100 Bitcoin giveaway, so here's the winner from that video, along with proof of payment, so well done to you. For everyone else, be sure to stay subscribed for upcoming giveaways. So before we get into the details, let's look at what Celsius is and how it works. Just remember, this is not financial advice. Celsius Network is a centralized platform that offers yields on a variety of cryptocurrencies, including Ethereum, Bitcoin, and several stablecoins. Its positioning is reminiscent of that of a bank, but it appears to operate more like a hedge fund. The company's business model is multifaceted. The first section is where users can earn interest on their cryptocurrency. It works like this. You deposit your cryptocurrency in Celsius and are guaranteed at a certain annual return, which may vary, but is publicly advertised as up to 17% APY, or annual percentage yield. The second section allows users to borrow funds and use their cryptocurrency as collateral. For example, if you need USDT or USDC, but don't want to sell your Bitcoin, you can use it as collateral and get a loan from Celsius at a certain interest rate. The company Celsius isn't the only one that provides these services. Many of them have begun to operate in recent years, giving rise to the term CeFi, which is a decentralized finance (DeFi) alternative, in which users still work with a centralized middleman. And what's relevant to the current market situation, and why Celsius is in a state of obvious distress, is the part where they promise a certain rate for users to deposit their funds on the platform. Celsius offers these kinds of returns on a variety of stablecoins. Naturally, this sparked a lot of interest, and the company has done exceptionally well in recent years. In fact, in November 2021, the company increased its latest funding round to a whopping $750 million, valuing the company at $3.25 billion. The success of Celsius stemmed from its ability to consistently earn higher yields than those it delivered to clients. For example, if they promised a yield of up to 7% on USDC, they would use the USDC they had deposited to earn a higher yield. But what exactly is the issue here? Well, during normal times, there would be no issue. However, when the market falls, as it did recently, the issue with this becomes all too apparent. Ethereum has lost nearly 50% of its value in the last few weeks, while Bitcoin has lost more than 30%. This exposed some of Celsius's issues, revealing that some of their positions are likely not being managed properly. So what actually happened? What exactly went wrong? When Celsius abruptly halted withdrawals and transfers, effectively locking out all their customers, it was a major red flag that something was seriously wrong. The power of blockchain-based technology, on the other hand, makes things completely transparent. The community has been keeping a close eye on some of the positions held by Celsius, and things aren't looking good. For example, we can monitor the company's progress on a large DAI loan using Oasis, a maker-supported protocol that allows users to borrow DAI against any kind of collateral. Now let's learn it with an example shown in the picture. Celsius has borrowed DAI with a current collateralization ratio of 195.93% and over $545 million in locked WBTC, wrapped Bitcoin, as collateral according to the image. They have a liquidation price that is 26% lower than the current Bitcoin price, and if they reach it without adding more collateral, their entire position worth over $5 million will be automatically liquidated on-chain. The alarming thing here is that Celsius has already added collateral to the loan multiple times, in the last few days and weeks alone. Their position was once on the verge of being liquidated by less than 5%. Remember, those are likely funds that Celsius users deposited in the hopes of earning a return, and they were just 5% away from being completely lost. Not to mention the ramifications if over $500 million worth of BTC were to hit the market during these difficult times, and the cascading effect it could cause. While this may be acceptable for a single trader with high risk tolerance, it's at best questionable for a multi-billion-dollar corporation managing the funds of ordinary people. And this is just one of many examples of why the situation appears to be bleak. Another is that just before they halted withdrawals, the company sent $320 million to the FTX exchange, without disclosing it or giving the public advance notice. Perhaps most concerning is that the company went completely silent a few days ago, precisely when all of its users were concerned about their ability to access their funds. And this thing also puts the entire crypto market in huge danger, just like Terra, except now the situation is slightly different. Let's delve into it. Because of several factors, the current situation with Celsius poses a short-term, as well as a long-term threat to the entire cryptocurrency industry. In the short term, Celsius has a large amount of cryptocurrency. As of the time of writing, their website still claims to have 151,534 bitcoins in assets. Though this is unconfirmed and highly suspect given the recent turmoil. But whatever the figure is, we can say that Celsius is one of the industry's largest lenders, and if they start liquidating assets, it will undoubtedly cause a market stir. Some have speculated that the company's recent declines are due in part to the company's sales. This brings up the long-tail risk for the entire cryptocurrency community, as well as the need for stringent and prohibitive regulations. When the Terra ecosystem went underwater, regulators from all over the world began issuing warnings and putting in place harsh frameworks in order to protect investors from similar events in the future. What happens if a multi-billion-dollar crypto-native company goes bankrupt due to poor fund management, fueled in part by ambiguous or non-existent regulations? It won't be pretty, and it won't be useful in our opinion. Regulators will seize every opportunity to scrutinize the industry further, and they'll have the perfect excuse to go the extra mile to protect retail investors. Now, the final question here is, what is Celsius doing to prevent this from happening? Will they be able to stop it, or will they suffer the same fate as Terra Luna? As a result, the Celsius network has intensified its efforts to resume all suspended activities, and it has been reported that the company is considering a corporate restructuring and possible refinancing. They've hired restructuring attorneys from the law firm Aiken Gump Strauss Hauer & Feld LLP to help them figure out what they should do next to fix their financial problems. This comes after a leading competitor, Nexo Exchange, made a formal offer to buy Celsius's qualifying assets. In light of these developments, the network's native token CEL rallied by over 100% during intra-trading hours on June 14th, keeping the majority of its gains after 24 hours. On-chain data revealed that buyers were attempting to profit from the price increase, as the number of daily active addresses transacting the CEL token increased by 13%. Finally, despite rising prices and an increase in the number of active addresses on the network, transaction volume is still declining. This suggests that despite the growth, many investors are still hesitant to buy CEL tokens, because the future of Celsius network is pretty much up in the air at this point. Of course, we all hope that Celsius can find some solution for this, so we don't suffer a major blow just like Terra. On the other hand, companies like Goldman Sachs are planning to ask for $2 billion from traditional as well as digital currency investors as capital for investing in assets of Celsius network at extremely low prices and with conditions in the event of the company declaring bankruptcy. Since the cryptocurrency lender is going through a difficult situation in the extremely volatile cryptocurrency market, Goldman Sachs has a significant interest in Celsius stock. And right now, Goldman Sachs is waiting for Celsius Network to make its official announcement before giving cryptocurrency investors the chance to purchase Celsius stock at a steep discount. For cryptocurrency investors to manage cryptocurrency deposits and then open up opportunities for cryptocurrency loans, Celsius Network has guaranteed a high annual interest rate of 18.6% in the cryptocurrency market. So let's see what will come out from this. And this ends the video for today with the explanation of all about Celsius. But don't forget to ask the questions in the comment box below if you have any. Now, I hope you've liked the content. If yes, then be sure to like the video, subscribe to the channel and hit the bell icon so you don't miss out on any of our uploads. See you in the next video, and until then, goodbye.